Thomas Taplin and you're watching The Press Review. The United States of America's Federal Bureau of Investigation is to begin a worldwide criminal investigation of the foreign exchange market to root out any possible manipulation of both currency and commodity rates. It's been reported that the $5.3 trillion a day market is being investigated not long after the LIBOR scandal sent shockwaves across the finance industry. But this time almost every conceivable commodity or currency is being scrutinised, from oil to interest rate swaps. Since LIBOR, where fines totaled around $2.6 billion, regulators of the EU and Switzerland are already beginning their own investigations and cooperating with US authorities over the situation. It's also been reported that the US Commodity Futures Trading Commission has been conducting its own investigation into market manipulation as well. The only real protest right now is coming from Germany, who doesn't believe there is any need for a review of its country's currency rates. In the UK, meanwhile, and as a way of finding some sort of solution or preventative measure for the future, the FTSE Group is looking at possible ways to change the way WM Reuters calculates rates as opposed to stopping using the service altogether. But it's really in the commodities market where most of the real pressure is being directed. The European Union Competition Commissioner, Joaquin Almunia, may personally examine the market himself, even after boosting an increase in investigations over rate authenticity for oil, interest rates, derivatives and foreign exchange. A recent survey also suggested that traders of commodities who buy and sell as much as $5.67 trillion of raw materials a year say the benchmark prices are wrong by almost 30%. This may have also helped to spur on such an investigation. So far, it is unclear which banks will be targeted in the US, but so far 4 companies have been fined for the LIBOR scandal, including Switzerland's flagship bank, UBS. Additionally, it's been reported the UK's Financial Services Authority has recently sent requests to 4 banks, including Deutsche Bank and Citigroup, asking them to send over information relating to in-house communications like emails, instant messages and phone records. Meanwhile, in an attempt to kickstart their investigation in the US, European Union specialists raided the New York offices of one particular company that analyses the price of dated Brent, the benchmark for more than half the world's crude oil. Well, of course, we'll keep an eye on this developing story for you as it happens, but right now that's all from the Press Review. Don't forget to keep checking back to get the latest update on delayed US data from the partial government shutdown, but I'll see you next time. Goodbye.